All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Welcome in, Tiamat, Sudik, Samuel S, Grotto EZ, Team B Willa, B, Andreas. Welcome in. Thank you guys for joining. We are at some key times for Bitcoin. We are about to see key macro decisions being made in the market, which could cause a lot of volatility. So be prepared for tomorrow. FOMC rate decision, and we are just preparing for the trade setups, and we are going to trade whatever comes here. So Bitcoin is right now today seeing a key swing failure pattern of last Friday's highs into actually hitting our daily level on the chart. And we did get a pretty bearish reaction from that initially. If we zoom in onto the 15-minute, you can see nice swing failure pattern dropping down here. But we are back inside of our smaller range. And let's go ahead and zoom out on that 2-hour chart here. And we can look at our prior range. So let me go in here. We'll turn on our prior range. This guy here, this was our prior upper range. And you can see that's where the bottom of this purple box is, about 116,200. What we are seeing right now locally is Bitcoin is trying to hold and reestablish back inside of this previous range here. So yes, we are seeing the swing failure pattern. Yes, we are seeing the rejection from the daily, but so far we have not lost 116.2, which could be key for us to see that bigger rollover to see a larger drop on Bitcoin. So I'm going to be watching for that locally. Now, I do have to say this while we're here on the 2-hour chart. We are setting up, now that we've taken out that high, we are potentially setting up for some bear divs. It's very slight, but it is a higher high on the price action. And you can see locally as this range has been developing over the past week or so, we are seeing lower highs on the momentum waves, lower highs on the momentum waves here with our money flow draining out of the asset. And we have bear divs on money flow here on NAMI as well. This was one of the key areas where we were looking for a potential rejection and a rollover for a bigger complex correction to occur here. And this could be it, or we could come a little bit higher. And I do really like that 118K area, really 117.6 to about 118.5. That area of resistance above is really nice to see as well. It is our golden pocket, and oftentimes in a bigger correction, you will come up to that golden pocket, reject from that golden pocket, and then see the bigger move down. So a couple possibilities to be watching here over the next couple of days. Locally, we are still struggling within this smaller range here. We can actually zoom in and look at this range in just a second. We will look at this range in just a second. But what happened just today on the charts was the SFP of Friday's highs, taking out our semi-equal double highs that we had here. And now we are back underneath, rejecting, finally hitting that daily and rejecting so far with bearish signals on the chart. If we zoom into the 30-minute chart, you can see here also on the 30-minute chart, first off, we've got those bear divs that are developing, and money flow has kind of just been draining out of the asset, about to cross over into the red again. So it's really, for me right now, I want to lose 116,200. I want to lose 116,200. If we lose 116,200, I do think we'll at least see a rotation to the bottom of this range. And let's actually talk about this smaller range right now. We've been in this range since last Thursday, so not even a week yet. But this is our small range that we are kind of in a holding pattern. I suspect we might be in a holding pattern until FOMC tomorrow. But we are breaking. So earlier today, yesterday in the video, I talked about a potential rejection from this area here, and we did get a very nice rejection. Now, if I pull the volume profile back, you can actually see that's where the POC of the range was, if this will load here. That's where our point of control of our range in confluence, come on here. If it will load, that was where our point of control of our range in confluence with our local golden pocket was. And in yesterday's video, I did highlight how that could be a small scalp area where we could see a rejection from that area. So you can see we did come up to that POC. We did come up to that golden pocket. We got a rejection. Now, by the time the price action developed and got up there, if we take that volume profile and we bring it up to that level, you can see that, yes, it was still the POC at that time. It was still our golden pocket at that time. but our value area low, we were back inside. We were still inside of this range pretty much. You can see we had a, didn't mean to do that. We had a small deviation out of the bottom of that range. We were able to get back in that range, back test the value area low a couple times locally. And after holding the value area low, we expected to come up to at least hit that point of control. So we did hit that point of control. Now, that was a nice short position. That happened while I was sleeping. I did not take that short position, but if I was at the charts, I would have taken that position. And my first TP, of course, would have just been the value area low of the range. So if we keep pulling this range over, first off, now you can see that the value, we did come back down after rejecting from the point of control in local golden pocket. We came back down to the value area low of the range. We bounced from the value area low of the range. We even grabbed local liquidity from Monday's lows. Really not Monday's lows, just local lows. And then we pushed up, now pushing up through the value area high of this local range, which is also in confluence with the value area low of our previous range at 116,200. We kept pushing up, had the swing failure pattern into the daily, and right now is what we're watching right now is the reaction that is going to occur. So if we come down to 116.2 and we bounce, first of all, that would mean we'd be finding reacceptance back into our previous range. And also it would mean that we are breaking out of our local range, our 5-day range, back testing bullishly that value area high. And if we do that, I would expect us to continue pushing a little bit higher here, to continue pushing up to our next resistance area. So that's kind of what we'll be watching out throughout the stream to see if we lose 116.2. If we do lose 116.2 with the bearish signals on the chart, now you could have taken the swing failure pattern already, the swing failure into the daily. Remember, anytime you're looking for a swing failure pattern, if there's a local resistance above and you SFP, you pierce that level into that local resistance and then you lose that level, that is a prime candidate for a short position. Even if it's just a scalp short position, that is a prime example of a good trade with really great risk management there. Just looking at a short position, if you shorted that, you put your stop above the highs and even just targeted the value area low of the range, that's still a 5-to-1 risk reward ratio just for that slight scalp that we're seeing right there. And that could be a small TP1 of 20% because if we break back in it, we could be expecting maybe larger drops to the downside here. Yeah, so this is kind of what I'll be watching here over the next few hours. I do want to talk about the liquidity really quick. If we look at our heat maps here, now this is an aggregated heat map of the past week of price action. You can see that we do still have a lot of liquidity resting above us. We didn't quite come out and take out all that liquidity yet. And we also are forming a lot of liquidity right below us. So at the highs and lows of our local range, we're forming that liquidity up above the highs of our local range and below the lows of our local range. And what we often see with these big interest rate decisions or big whatever high impact news events that we see, the market makers usually will like to wreck both sides before continuing the move or before seeing the real move be made. So we do need to be aware that that liquidity and that volatility that we do see tomorrow could give us a bit of some quick dumpage or quick pumpage followed by quick dumpage. We really need to kind of be patient with that and look at our oscillators. Remember, technicals are first and foremost on the chart, and then the news will play into effect, especially macro news decisions like this. If any of you guys were around in 2021 with the rate cuts, you understand how powerful rate cuts can be and how much they can move price action. So this is going to be potentially the first rate cut that we've had in a couple years, and this, I do believe a 25 basis point rate cut has already been kind of baked into the price action. But if we do get anything greater than a 25 basis point rate cut, we could see some very bullish momentum for risk on assets. And if we only get a 25 basis point rate cut, and then Jerome Powell comes out 30 minutes later and is a little bit hawkish about the economy still and about inflation, which we did see inflation come in higher than expected on core inflation just the other day, we could see that actually be a bearish catalyst for him to not lower rates as quick as people want, as quick as the market is expecting. So anyways, welcome in everybody. Let me just check the chat here. Yeah, Sudeep, I did see something on that Gen Z protest overthrowing the government. Now, I didn't look too much into it. I just kind of saw headlines on it, but I do think that's wild. And, you know, people are just not taking stuff from governments the way they used to. And so to me, it's not surprising. We're in a world where there's a lot of chaos, a lot of heightened emotions going on right now. And these things are happening. These things are happening all around. I mean, last week during the stream, it was live while we were streaming. There was the assassination on Charlie Kirk, which was really a crazy thing to see. And so, yeah, there's definitely crazy times going on. So I said it's an oven mitt. I don't want to burn my willy while cooking lasagna. Well, that's a good thing to do, Mark Dutch. Welcome in, man. I appreciate you so much. And yeah, wrong chat again, but that chat's open, man. So just go post it in that chat and I'll respond to you. I think we need to focus on how many rate cuts we are going to get into the end of year 2026. Yes, Tiamat, I agree 100% because I do think that the amount of rate cuts, if we get a summary of economic projections and the rate cuts are going to be like a little bit less, if they're planning less rate cuts per FOMC meeting over the next year than expected, even if we get a rate cut tomorrow, that could provide still some bearish momentum to the downside for risk on assets, just knowing that it's going to be higher for longer and we're going to kind of still be in restrictive territory. Because even if we get a 25 basis point rate cut tomorrow, we're still in restrictive territory as far as the overall interest rate, the federal funds rate. Anyways, guys, Bitcoin is seeing a little bit of a bounce here right now. We didn't even come down to actually hit that 116,200, but we're trying to hold back within our previous range value area. If we do get back above these prior Friday highs again, I think that's going to be pretty bullish. We had the attempted SFP. If we start to get back above here, I really am going to be looking for that push up to our next resistance area. And then once again, we do have that liquidity that's resting above. Let's look at our Model 2 heat map here real quick. With the Model 2, let's zoom out to the last week of price action. Yeah, I mean, we still do have that liquidity that's just above us here, hitting up into about 117, 117.2. That would wipe out all that liquidity. But I do believe if we get up there, we're probably just going to push up a little bit higher to our next resistance area. What's up, Darren Does Things? Yeah, the economy is going to crap, man. Cutting when stocks are at all-time highs. Yes, that's the thing. I remember someone in here last time, I think it was Mark maybe, mentioned that the 46% of the circulating money supply that was printed in 2020 is still kind of working its way into the market. It's going to take years for that to kind of level and balance out. So I do think that the prices of assets are just inflated and they're going to stay inflated. They're never going to go back down to pre-2020 levels just because of the amount of new money that was injected into the market. And now if we start cutting again, it gets cheaper to borrow. We're going to have businesses, just the economy in general start to borrow more. Some of that money, a lot of that money does work its way into the markets, into the futures markets, derivatives markets, stock markets. And we could just see this thing continue to push up here. But overall, it's very, very unhealthy. It's very unhealthy to see this in long term, and it could cause a big recession or depression in the next coming decade or so. That's just my opinion on it. Who knows? I'm not a super good financial expert, but we do know what the way that the money printer does make markets move. So, okay, the dot plot is all over the place. There's an uproar and disorientation between all the Fed members. Yeah, and that's another thing. The Fed members kind of don't fully agree with each other, and that's kind of normal. That most, a couple Fed members will always be more hawkish than some of the other dovish members. But there is kind of chaos within the ranks of the board, the 12 members, and also we do have to know, just be aware that the political pressure being put on the Fed is something that they say they don't take into account, but that they want to save their jobs as well. Jerome Powell likes his cushy job and he wants to save it. So we'll see. We'll see what happens here. Okay, we should be looking for more direction from a larger group of people versus so fragmented. Yeah, the thing is, it is tough because a board of 12 members is not the worst thing to see. It's not like one or two, but at the same time, yeah, 12 members, which is from the Fed, which is a private institution. It's not even government ran, making really the decisions for not only the country, but really for the world, because a lot of the world follows America, is kind of scary. We are the biggest economy in the world. So that's, something to note. Okay. What up, Wander? Welcome in. Yeah, guys. So just locally, looking at this now, we can have the confirmed SFP. We have the confirmed higher highs in the price action just within this range of the past 5 days, and you can see we have the confirmed bear divs as well. Multiple drives of confirmed bear divs. Actually, not multiple drives. Really, it's just from this high to this high here. But the money flow is also kind of draining out of the asset overall. So, and then very, very locally on market or on NAMI, excuse me, we do have the bear divs here, bear divs with bear divs on the money flow here on the hourly chart. And so this for me is a sign that, yeah, we could even just waiting till tomorrow, around this time tomorrow, we're going to see that FOMC decision. We could even just continue to play this range until that decision. Let's go in onto the 15-minute chart. On the 15-minute chart. Okay, so locally, this is nice to see. If you want to come up and grab that liquidity, we did print that hidden bullish div signal on NAMI, and those hidden bull div signals locally for the day, we've been in an uptrend. And so when you see that, you can probably expect the uptrend is going to continue. Also, if we look at money flow is rising again. NAMI, it's kind of flat right now. But yeah, it looks like Bitcoin is trying to not see that confirmed SFP. I mean, we did get the confirmed SFP already, but it looks like Bitcoin is trying to make another push to kind of invalidate that as a fake out. What I would do right now, very, very locally, is pull your fib from the highs to the lows that we just made. And if we come up to this golden pocket right here, golden pocket 786, let's just throw the 786 on there as well. If we do come up to that area and see a rejection from that area, if you miss the SFP short, you could look for a short from that area. Even, let's just say here, you put your stop above the high, just like if it was an SFP. Now, that's if you go down to the value area high of this local range, that's not a good risk reward ratio. So in this case, we would have a little bit more confidence that after seeing the SFP, we're rejecting from a lower high. So I would expect this to roll over a bit more, even if it just came down to VWAP, which at that time the VWAP could be in confluence with that POC there. And then that would at least give you a 2-to-1 risk reward ratio, or like a 2.5-to-1 risk reward ratio. That could be a very small scalp. But yeah, locally, let's actually zoom in onto some lower time frames here. Let's go to the 5-minute chart. 5-minute chart. Money flow does look pretty good. Yeah, money flow looks pretty good here. Now, we did see that hidden bull div signal on NAMI on the 15-minute, but just very, very locally, like in the last 20 minutes or so, we're printing a hidden bear div on the 5-minute chart. Now, one of those is going to win out, and it's probably going to be the higher time frame one. It's probably going to be the hidden bull div, because we are in an uptrend locally as well. The trend is your friend until the end. So we do have to give more bias to that hidden bull div. Also, money flow rising here. We have to give more bias to that. But as you know, we always say price action first, indicator second. And as far as the price action goes, we got the confirmed swing failure pattern into our daily level, finally hitting that daily level. If we do come up to that local 786 golden pocket area, that JC pocket is what I call it, and we do reject from that area and start to lose that golden pocket, then we could maybe expect a continued push to the downside locally. Let's see here, 3-minute chart. Yeah, I mean, very, very slight bear divs here on the 3-minute chart. Your money flow was rising. Now that we are kind of correcting in a channel here, we are starting to see money flow come out. But this is a 3-minute chart. I wouldn't put too much emphasis on a 3-minute chart. We are at resistance. We did get the confirmed swing failure pattern. So if you are a scalp trader, I mean, that is a good scalp to look at for the day. If it gets invalidated, your stop, I mean, you'll lose 1%. You calculate that position size based off of that wick. But if you're not confident on it, you don't have to put a full percentage on it. But that's such a good, that's almost, you could use 10x leverage on your full account, or let's just say 9x leverage on your full account, and still get stopped out and only lose 1%. So very, very good stop percentage there. We don't like flat punanis. That's true. That is true, Mark Dutch. So yeah, guys, not too much. Let's go on to our open interest and CVD charts here. What I will say about the push up that we've seen today It does look like a pretty healthy push up to me. We did get let's grab this here. Let's go on to the 5-minute chart. And since our lows, you can see our open interest has been steadily increasing here since our lows. So we do have new positions opening, and those new positions are at the value area low of the range. And if you look at a majority of those positions that opened up, they were longs at the beginning. So, coming down to this area, a lot of fresh longs were opening up in that area, causing the price to push higher. But once we got the swing failure pattern, of course, you got the dump in open interest because people got stopped out. So that means trades are closing. They got stopped out above those local highs, invalidating their plan. And now we are starting to see some fresh shorts coming into the market. You can see here on the open interest, let me just clean this up a bit. Since we got the SFP, which was right up here, you can see right here, that initial dump, closing out all those positions, stopping out all those traders. And since then, open interest is rising again consistently and steadily throughout the last couple of hours. And our CVD here is now dropping from that area, meaning that fresh shorts are coming in. Fresh shorts are coming in, and those shorts are trying to play the SFP, which I do understand that. You got the confirmed short trade. So now if this is not going to work out, all of this local short, all of these fresh local shorts can be used as fuel for a short squeeze to the upside. So for me, what I'm going to be looking at very, very locally is just that 116.2. If we come down there and we start to really flip this to support, I do think we will continue pushing higher and really pushing up to our next resistance area. But we're going to be watching that throughout the stream. Let's actually just set an alert here. We'll add an alert around 116.250. If it's going to work, let's see. There we go. I do have to say what we're seeing so far, this channel that we're seeing, very, very local micro trend, and channels are just pulling the trends. You see this local trend here. It does not look the worst here. It looks really corrective, and it looks like if we start to break out of this, break above this naked monthly point of control, we could continue. It's not naked anymore. Obviously, it was hit last Friday. No, Friday here, but it's still a monthly point of control that's kind of fresh. This could be seen as a bull flag. I'm not looking at trading this as a bull flag, but here's the thing, guys. If we do hold this local support and we start to break up, it will look like a bull flag playing out. It will look like you have your pull. You have your descending channel flag. You come down here, you hold that, you're going to break out. It's going to look like a bull flag playing out. So very, very locally, we could watch that as well. Yes, Ace, that is really, really important. You mark out your levels. You look at the price action first. Indicators are only confirmations whether to enter or exit trades or to stay out of a trade if it's choppy. So for me, it's always been price action first and a market structure. Obviously, market structure is king. Liquidity is king. Let's see. Yes, Chad P, absolutely, man. Thank you for your time and thank you for joining. I appreciate the support. Yeah, always start your analysis with every indicator switched off. You know what, Mark? That is actually a really, really good piece of advice there. I don't do it personally, but I'm so used to just marking out the price action first. I kind of have my routine down, but if you're a newer trader, that would actually be a really good piece of advice there. Turn off your indicators for a second. Mark out all, start with your price action, mark out all your key resistances, support levels, and then you can come in. Once you have those, you can come in and you can start to look at your indicator to get a little bit of a bias on what direction it's going to head, and also to look for confirmations if you're at a key level to look for a short or a long or not. So very good. XMR got delisted from many exchanges. Yeah. Well, I thought Monero got delisted from a bunch of exchanges a while back, but I do know that there's kind of been an attack on Monero even more lately. So, yeah, but serious crypto, we will look at Monero, XMR. I believe that's Monero, right? Unless I'm having a brain fart here. Yeah, nice. Mark out your monthly, daily, weekly, turn them on, yeah. So here's what I do, guys. I create folders, and you can see this is my folder with all my naked monthly points of controls. So first I'll come in, I'll mark them all out, then I put them in a folder. I do the same with the naked weekly, same with the naked dailies. I do the same with monthly levels, weekly levels, daily levels. Of course, I have my pitchfork folder, macro stuff. I mark out all those key things, and then I put boxes where there's confluence of support or resistance. So like for instance, let me zoom out into the hourly chart. You can see up here, this box up here above us. Actually, let's do 4-hour chart. This box above us, it's a very, very important box. If we look at a couple ranges, and actually, I'm going to talk about this larger range in just a second. So we have this. This is our previous range that we are attempting to find re-entry, re-acceptance back within. You can see we're a little bit above the value area low, which is at the bottom of this box at 116.2, attempting to pierce back into that range and find balance back within that range. But what I like to do is, forgot where I was going with this. Oh, I wanted to look at the bigger range. Okay, bigger range is this range here. So it's taking the prior range that we were in, this upper range, but you can see that that upper range does have a pretty nice deviation down here to the bottom. Like if we turn on that upper range, let's go back here. You can see the value area low is actually here for the upper range, and all of this is a deviation of that range. So now that we have one deviation and we came back down here and we saw a bounce from the bottom of the liquidity grab of the lows of that range. This is the value area low up here, but that was the actual lows of the range. Now that we're starting to break back above these prior lows here, that general area of support resistance flip, now we can take this upper range and we can combine it with this rise that we've been seeing over the last couple of weeks, forming a bigger range here. And you can see once we form that bigger range, of course, you can see how well it's been respected too. Value area low, rejection, rejection, rejection. Of course, that was kind of your anchored VWAP in there as well. You break above it. Since breaking above it, we have not come up to the POC yet. So we're close to the POC. So we could see that move continuing up to the POC. But oftentimes you will backtest that value area low to confirm a re-entry back within that range before continuing up to the value area high. In healthy markets, you generally will see that. Not always, but in healthy markets, you generally see that back test and confirm a flip to support. But yeah, very, very locally, that would be my local resistance or support, excuse me, below us. You can see it is the anchored VWAP from our all-time highs. So we're breaking the downtrend of the momentum of this downtrend. We're starting to break it to the upside a couple days ago. If we reject, we can look for a flip to support to continue this overall trend higher here, higher highs, higher lows. But if we come up to this point of control first of the range, that is going to be a significant resistance up there. We have an internal liquidity grab into that point of control, but also if we just turn on some of our levels here that we've already marked out prior, you can see naked weekly point of control at the bottom at like 116.8, not 116, sorry, 118, 117.8, excuse me, 117.8. We have naked dailies in there. We have our range point of control. Also, it's the golden pocket of this entire push down that we saw. So very, very important level there. You can see golden pockets in there. Very important resistance. And generally, if you get back above the POC of the range, you're going to break up at least to the value area high. But also, if you get above the golden pocket, you're probably going to come up to that 786 area, the next big Fibonacci retracement level. And really getting above the point of control, or the point of control and the golden pocket, is a sign that you could be coming for those highs sooner than later. In this case, that's the all-time high. And I do want to mention this again. Remember, when we were coming down to the bottom the other day, when we were coming down to the bottom of the range, hold on, where's that here? Did I delete? There we go. The bottom, we were hitting into that pitchfork midline, and now let me come in here and turn on this pitchfork. Nope. Yeah, it's this one here. This pitchfork was pulled from the last. This is the one that we've been following, our Wave 3 pitchfork that goes all the way back into, 2024's correction, and then also the Wave 3 that we saw when BlackRock applied and listing happened for the spot ETF. So you can see here that, let me get rid of some of these. I actually want to throw that one back on there. Anyways, very important macro support level that we did bounce from at that pitchfork midline. Once we bounce from that pitchfork midline, we also do have to remember that area of support was the macro value area high of our 2025 price action. So overall, our context needs to remain bullish. We are in bullish market structure on higher time frames. And yes, we could still see the larger corrective move down, but this could have been it. This could have been the end of the correction, and we could be about to come up to new all-time highs. And in that case, of course, we're going to be trying to tackle the top of the pitchfork band again, and then ultimately the top of the pitchfork. So we'll see. I do believe the FOMC is going to give us some sort of volatility, and we should get a break of this range, either to the downside or the upside. Grotto EZ, thank you, man, for the super chat. How do you feel about everyone calling for the top due to previous instances where rate cuts were caused by the bear market? If we got time, yeah, Tau and Avi. We'll definitely look at Tau and Avi. How do I feel about this being called the top? Well, I definitely think we're closer to the top than not. I mean, we've already been running for what, 3 years now, 2.5, 3 years. And we are seeing, I mean, like, we're technical traders first and foremost. And if we look at the technical charts, we have some pretty significant bearish divergences on the chart. 3 higher highs, 3 lower highs here. Money flow is now kind of starting to drain out of the asset here. Nami, you look at 1, 2, 3 drives of bear div on money flow. So every weekly top of money flow, we're getting higher and higher in the price action, but less money flow is flowing into the asset here. And these are signs that it's getting a little bit exhausted and could be towards the end of a bull market, and we could be about to kind of shift into a bear market structure. A lot of times people don't understand the rate cuts occur because there's actually the system is broken and they need to do an emergency rate cut. Now, we're not really doing emergency rate cuts right now, but it doesn't mean just because we're starting to cut rates doesn't mean that we can't see tough times. Maybe they're going to cut rates too early. It's going to cause inflation to go way back up way quickly, and then that's going to cause the depression. We're going to see some sort of stagflation occur in the next year where we really F up the economy and people are really struggling, which could cause markets to significantly take a hit. Okay, so sell the news is what I've been thinking too. Yeah, I mean, it could be a sell. I really do think we might see a sell the news. Everyone is so bullish on this rate cut. And if it's just a normal 25 basis point rate cut, that's really nothing. We're still in restrictive territory, and everyone, I just feel like the market makers are going to trick everyone that the second they hear a 25 basis point rate cut, they're going to long on leverage, and the market makers are setting their trap, letting them get that little push up, and then they're going to see that big dump. So I'm very aware that market makers like to play retail like that. But let's go ahead and I want to go into Ethereum real quick. We'll go into Ethereum. We'll go into Solana. We'll go into the major ones, but let me check the chat here because I know there was another coin that we were going to look at. Where was that? CPI. Okay, we'll do Aave and Tau, but there was one that someone asked about. Oh, XMR. Let me just check out XMR. XMR. USDT. I guess we'll have to check the Coinbase. I mean, we could check the index chart. Let's just look at KuCoin for now. Yeah, it's getting a nice push up today and over the last couple of days here. Very interesting. Nice little rounded bottom here with, I guess you didn't really see bull divs. You saw bull divs down here. But this does look like it could be some sort of accumulation range that's formed in here, and you're starting to break that accumulation range now, breaking it to the upside. I would say weekly market structure is definitely bullish right now. Let's just pull this here. Yeah, broke that accumulation range to the upside, even came back down, back tested it. Now you're continuing to push higher here. Let's see. That I wouldn't call this the start of an impulse here because you retrace to that 886 there, which is not a deal breaker, but it's very uncommon. So this could be somewhat of a correction in here, and then you're going to start your impulse. I'm not too clear on that, to be honest with you guys, but I would say we are seeing local market structure break, and then this correction that we saw after this impulse on the weekly, this multiple weeks of green here, nice three-wave correction, higher low, and now we're starting to push up again. Let's actually just look at where that, yeah, into your 786. So you see your three-wave correction into your 786, hit your 786, and now you're starting to push up again. But because this last few months here was a three-wave corrective move, it is more likely that this continues to push higher. Money flow looks pretty good here. We did get the green dot on the weekly a couple weeks ago. Let's zoom in onto the 2-day chart. Yeah, 2-day chart, money flow on NAMI looks pretty good. Money flow's just crossing into the green on Market Cipher B. So we could see this run for a little bit here. That monthly level there, at least on KuCoin, was not tapped. You can see it was just barely front run a couple weeks ago. Excuse me, not a couple weeks ago, back in May. That's been hit. Okay. We're going to watch that golden pocket above us because there's that internal liquidity of a weekly high into that golden pocket. And that, if we are going to continue dropping to the downside, that could be a rejection area. But I would also look at, since this was a three-wave corrective move, this looks very three-wave-ish here. Corrective ABC correction here. You could do this for your wave one, SFP into your golden pocket, and then retrace back down to the golden pocket, and then see your big 3, 4, 5. So that's honestly more locally what I expect because this was a three-wave corrective move here, and because momentum has been bullish in market structure. Okay, yeah, we have our weekly up here as well. It's so close to the monthly. I mean, I guess we can mark it out there. Those weekly and monthly levels are pretty much the same. Right there, 418 to 421. And then let's zoom in onto the daily. I would be looking at this as a range on the daily. Now, this big wick here, of course, XMR is going to have lower liquidity. I would be looking at this as a sideways range, not including that wick. I wouldn't include that wick. I'd go right after that wick. And so yeah, we're at the value area high. You break out of the value area high, you probably might see some sort of reaction from that SFP, but watch for that. Of course, you could also watch for that pullback to the golden pocket, like I said. Weekly POC down here at the bottom of the range is a local support level that I would be watching. Yeah, it's also a naked monthly point of control down there. So very, very key level of support here at this box. Let me make that. And you have a naked weekly just above that. So actually, I would extend this box a little bit more. Just that's your general area of support is this guy right down here, more locally. Naked weekly, naked monthly, weekly level, point of control of your upper range. And then as far as the daily naked daily points of controls, I mean, you got a lot of them on the way up, of course. In some sort of straight up move like this, you're gonna leave behind some naked dailies. My indicator doesn't go back enough to see if there's naked dailies within here, but I just would be aware. Let's see here. We've hit that daily. Yeah, I mean, really, if we break this value area high, you kind of have a clean shot up to this golden pocket, to this liquidity around the golden pocket. And you have a daily level there as well. Maybe. Was that tapped? No, it was, I mean, barely not tapped. 358.08, 358.24. So technically on this chart, it wasn't tapped, but I would consider that. I mean, on other charts, it's probably tapped, or it was a rejection from the daily, even though you didn't actually touch it. So you could keep that on there, but this is the next general area of resistance that I would be looking around. Even without that daily, it's still the SFP area. Yeah, and even on the daily chart, we could be looking at this as a 1-2-1-2. You're in your third wave here. Maybe your third wave is done, and then you're going to see a pullback and a 4, and then we get 5-4-5 to come up to that area. And all of that double 1-2 could be the bigger wave 1 of a much larger impulse up. Looks pretty bullish though. Money flow still looks pretty good on NAMI and Market Cipher B. You didn't really have bull divs coming into this lowdown here, which is a little bit concerning. Yeah, 4 hour money flow looks good. Now you are starting to form some bear divs into that value area high. Just be aware of that. Value area highs of big ranges are nice to see. And when you see bear divs coming into that, money flow is going to overpower that. Bear divs here. And on NAMI, anyways, the money flow is already starting to drain out. We do know that NAMI's a little bit faster. I would be looking, if we lose the VWAP today, we could see a bigger kind of dump down from this area. But because we could be looking at a 1-2-1-2, I'm going to pull a fib. Let's just say the third wave is over. Now, this is going to be really hard to count a subwave 5 count in here. I'm not even going to try. But let's just say that the third wave is done. That parabolic move from this bottom to that top was the end of the third wave. Then you would pull your fib from the lows of the third wave to the highs, and you're going to look between the 382 and the 0.5. And if we are going to bounce, that's going to be your area where you're going to bounce from. I would also look at pulling, let's pull a range of this bottoming price action here. All right, that's too low. But yeah, once again, this box of support is just very nice in here. Wrong one. I mean, look at this volume gap in this profile. So of course, if you start to, break above this point of control area here, quick move through that volume gap, and now you're coming up to your next significant volume resistance. Yeah, we do have some slight bear divs on the chart here. Higher highs here, lower highs here. Money flow's kind of flat. It is starting to curve down very, very locally. Uh, if you lose the VWAP, you could see a bigger dump. Yeah. No bear, well, very local bear divs here to here. You can also see Nami created those bear divs, and money flows now kind of draining out on Market Cipher B and in the red already on Nami. But the next big area, of course, I would be watching is this guy up here between like 347 and 358. Okay. All right. Let me scroll down here. If we get a 25% basis point cut and then we pump into the event, then Powell is hawkish during the press event. You know what, team? I actually think that is really likely what could happen. And if he gets really hawkish, we get the initial pump from the rate cut. People aren't, they're just going off the base information, the headline information. And then we get that big hawkish Powell and maybe a hawkish summary of economic projections, then we could see that big dump right afterwards. So yeah, there could be some shenanigans tomorrow. We really are going to have to keep an eye out on that. So as far as Aave goes, I mean, I'm sure a lot of these levels are going to be tagged now. So let's check this out. I think it's been a while since we've checked Aave. Yeah, so we've got a fresh weekly, and I think I just marked that wrong. That's right there. So we got a fresh weekly that hasn't been tapped. And then below us, that weekly still good. Okay, let's go on to our dailies. That daily is still fresh there. We actually have a daily here near the value area high of our local range. Now remember, this local range is important because we broke out of this pitchfork. So you can see bounce from the lower band of the pitchfork, came up, attempted to break above the pitchfork here, fell back inside, but bounced from that upper band. And now we're attempting to hold the pitchfork. So, of course, if we continue to hold the breakout of the pitchfork, then I expect us to continue pushing higher here, probably coming out to take out this liquidity above us. And you could see that last rising wedge type structure or parallel, wedge type structure until you get out and take out that liquidity at 400. Yes, that will take time because we're on the daily time frame. So that could take a couple months to play out. But if we're looking at this local upper range here, and actually I would probably even look at it. We pulled that volume profile because it was when we first broke out of the pitchfork. You take the high right after you break out of the pitchfork and you look at that range. Really, they're very, very similar, the ranges. So this range of value area low is going to be at the pitchfork support. Also, you have that SFP liquidity grab into that pitchfork into that value area low. So that purple box is still our purple box of resistance or support below. It's not supposed to be purple. It's supposed to be red. Not red, green. And then, of course, we do have the resistance above. I mean, we have a fresh daily level that's at the value area high. Let me make sure I get this right on. There we go. Daily level at the value area high. It's the value area high of both of our ranges, the very, very local, this guy here, and even a daily level above that with that liquidity. So I would say this general area is going to be your next resistance area, your big resistance area. We took out the lows of the volume profile. I mean, these are the ultimate lows of that range, but we took out the lows the last time we bounced from the value area low. And now we're attempting to, after taking out those lows earlier today, we're back inside the volume profile. So if we close this daily candle today above 296, let's say, it's going to look pretty bullish that we could see this kind of start to reverse here. Money flow doesn't look good, though, on the daily time frame. And actually, like, this doesn't look good at all. This continued bearish div here while money flows draining out of the asset, crossing into the red and still looking bearish. Hidden bear div printed, when was that? 4 days ago on this high. Hidden bear div on the daily. Ugh. But that hidden bear div is kind of played out now because we took out the lows, our last daily lows. Yeah, no naked weekly points of controls in this range left. All right. Naked monthly, that's this month though, so we can't mark that out because we're still in the middle of the month kind of. So just be aware that that 310 level is going to be a kind of important level where you could see a rejection. Like if we're going to bounce here from this value area low, reclaim the larger range POC, you could just work your way up to that smaller range POC in the naked monthly and then start to continue down. Just because the way that bearish money flow on the daily looks. Oh, wait. I just want to check out if we have any naked dailies within this range, this smaller range. Yeah, we do have one naked daily above us. At 317.7 ish. Overall, I would say we are still forming bearish market structure. Lower low, lower high, lower low. You could even say lower high, lower low, lower high, lower low. In here, this could have been a flat correction right here. And then let's pull our fib from the range low to the range high of this local range. And let's turn on our golden pocket. Now, I believe that is more. No, it's only a 40% pump. Okay, so we've already broken the golden pocket. Have we hit the 886 yet? No. Very close. 786 is we're below the 786 and yeah, today's daily candle close is actually going to be pretty important because if we close below 296, I believe we're going to come down to like 275 area. But if we can close above 296, we might just continue to range within this upper profile, this shorter profile here, and come up to, you have that naked monthly point of control. It's not naked yet. A monthly point of control around 310 with your range point of control there. Um, but then I would be looking really to come up to our box of resistance. Let's pull a fib from the last time we rejected the value area high of the range to that new low. And let's turn on our golden pocket. Yeah. So I would say that naked daily point of control does mean something because you have a golden pocket there. Now, this is an internal fib pull from our last rejection of value area high. You can see here that value area high, we rejected it. You come down to value area low, you bounce, you create a lower high. Now, if we're going to bounce from value area low, we could just look for another lower high before seeing another lower low, continuing this bearish market structure. So because we're in bearish market structure locally, I would say watch out for that golden pocket into that naked daily point of control. That's kind of a smaller intermediate resistance area, but I would watch that because naked daily points of control are strong and there is a golden pocket there. And then other than that, I mean, come up to this guy. So that's what I would look at for Aave. Town. Tia. Let me just check Binance. Ooh. Okay, yeah, I mean, what a crappy range. We You can see here on the weekly time frame, we had marked out this weekly. It's been a while since I've looked at this. We marked out this weekly, but that's where we bounced from a couple weeks ago. So now we can get rid of that weekly. We bounce from it. We have not come down to take the liquidity. And then we are back inside of this volume profile. You can see it was the value area low. So the weekly candle closed above above the value area low after bouncing from our weekly level. So that is something there. Means that we still want to range within this range. So now that we know that we want to range within this range, well, we can mark out that. And then we also rejected from this golden pocket. You can see we had a push down, came up to golden pocket, rejected golden pocket, continued the push down. So that golden pocket's been tapped. We still have our boxes above and below. But let's go zoom in onto the daily time frame. And let's just keep analyzing this range that we're in. Now that we're finding reacceptance back in the range after bouncing from that weekly level, we're rejecting from the POC and the pitchfork midline. So that is something there. Come up, you held value area low, you hit that weekly, you're getting back above. But if we reject here, that is going to continue bearish momentum, higher high, higher low. Lower. That's not a lower low, but locally within this structure, it's bearish. So yeah, you broke these lows. So it is a lower low, lower high, lower low. This could be a lower high before continuing to a lower low to take out your range lows, your actual range lows down here. Money flow is still leaving the asset. And on NAMI, it's topped out and about to cross over into the red. Rejecting from that POC a few days ago was not a good sign. And now you can see also it was just a wick above to hit that POC area. But overall, you're rejecting that pitchfork midline. I would just play this range on the daily time frame. So if we're going to look at that range, let's just come in here. Let's look at our points of controls within the range. Naked monthly, this is this month, so it doesn't count. But you can see a naked monthly point of control also up in our box of resistance. Even more important now. That's even more important resistance. We have a weekly level, a naked monthly. Our 786 is up there. So let's take this box and let's just expand it. Okay, and then let's look at naked weeklies. Ooh, okay. Yeah, right at the value area low, you have a fresh naked weekly down here. And we'll pull a fib from the lows to the highs of this move up. Let's look at our 786. Yeah, so naked monthly 786 is down there. In the scenario, we are forming a bottom. And we're going to start changing market structure. That could be a bounce area. But, I mean, you have to remember the overall market structure here is bearish. So it's at least a good level to attempt to scalp. But be aware, if you come down here and you bounce from here, I would still be looking at, like, kind of overall continuing the downtrend. So I would be looking at that as a scalp long opportunity. But this is with the 786, with the value area low, with the naked weekly point of control, at least some sort of support that we can look at and mark out for local trades. And then you have your naked weekly above us. That naked weekly is also going to be right around a 786. Let's see. Let's pull that. Actually, it's going to be around the golden pocket. Yeah. So you want to look at scalps like it. And actually, I would actually like this trade better. You have a fresh naked weekly from last week. here at that golden pocket. And so if you're going to look at continuing the bearish momentum, say we do get a rise here, we come back up here, reject here, and then continue at least pushing down to that 786 area. This daily level, has that been tapped? Yeah, that was tapped yesterday. So we're bouncing from a daily level. So if we're going to bounce from this daily level and get a move up, this is where I'd be looking for potential short. You'd want to see low time frame bear divs coming up to that level. And what I mean is bear divs, you'd have to zoom in onto like the hourly chart. And as you're pushing up, here, you'd want to be forming bear divs on the chart, coming up into that golden pocket. But bounced from the daily, now we can get rid of that daily. Now, very, very locally, you can see we had our kind of bottoming range here. This was a nice kind of rounded bottom on the hourly chart. You could pull a volume profile and look at this bottoming range. Yeah, it looks like we broke out of that range, back tested the value area high, and then we continued pushing up to that pitchfork midline point of control. Money flow doesn't look too bad here on the hourly. You can see it's nicely curving up here on NAMI, and market cipher B is curving up as well. So yeah, we might get a little bit more of a local move up. Let's check this 4 hour. Yeah, money flow's rising here. Money flow's coming up. We might get a little bit, and then we had the bull divs, lower lows here, higher lows here on NAMI. So this might give us a move up. I would just be looking at, and of course, even we have internal liquidity into that golden pocket, into that naked weekly. So that would be the resistance level, a local resistance level. And because we're in a bearish trend, that is actually a level, a short I would consider. Okay, let's go back to some of the other coins here. Let me check the chat here, see what you guys are saying. What's up, TXRX 0101? And thank you, TMI XMR. Yeah, I got it. Do you not think a shift in risk on assets due to the start of interest rate cut season would trigger more money flowing into the market overall? Yes, it would, Maddie. It would. But here's the thing. If they only cut by 25 basis points, that's not much of a cut. And overall, the federal funds rate is still restrictive. So it's still going to be very, it's not ideal to borrow still with only a 25% rate cut. So yeah, we could be tricking a lot of retail to, oh, you got a cut. You know, finally, it's the start of cuts. Now it's going to start to shift the overall sentiment of the market. Finally, we're out of raising interest rates and we're starting to cut. And that will give us some shift in sentiment overall. But what we could see is an immediate bullish reaction from retail. Oh, we saw a headline of a cut, pump up. But then overall, we're still in restrictive rates. We kind of already have that baked in, and it could give us a little bit of a push down. I'm just thinking as a trader right now. So overall, yes, that is a good thing. The lower interest rates get, the more people are going to borrow. That money does work its way into markets. It's good for risk on assets. So absolutely. Yep. TRX. I agree with that. TXRX. Massey33. Good afternoon to you, man. Appreciate you for joining. Oven mitts are great for protecting your naked POC. Absolutely. And when you pull out a fib, your oven mitts are great for your protecting your fibs, your POCs. Man, oven mitts just are the bomb. Monthly, weekly, daily levels, and anchored VWAPs, fixed volume profile. Yep. Can I use the sorry crypto face indicator? I've never heard of it. Is there really an indicator called the sorry crypto face? Is it one sorry crypto face? Interesting. Very interesting. Wow. Okay, so it actually does look very, very similar to Market Cipher B. And it gives you the bare divs on the chart. Wow, you know what, guys? If you can't afford Market Cipher B, I would not. I would. This looks like a good um alternative here. This does look like a good alternative. So I don't, uh, I'm just let me leave it there. Let me leave it there. But cool, cool. Sudeep, that's awesome. Thank you. I'm gonna actually take this and put that there so that people that can't afford it have something to look at. Yeah, Divine Hood knows it's important to shave the VWAP around your naked POC. Absolutely, Mark Dutch. It's key. It's key. What's up, R Pink? Welcome in. Not sure if you can get it straight from TradingView or not. MC-B public copy. Are you talking about that sorry crypto face indicator? Because that was there. Not MC. Okay, let's see. Not MC-B. I don't know if the capitals make a difference. Hmm. Let's. No. I'm not seeing it here. Yeah, Sudeep, comparing the local price action that we were looking at, it looks very, very similar. Yeah, and I can't find it on here, R Pink. So, but that sorry crypto face one, wow. All right, let's go into some of the other altcoins. Did we check out Ethereum? Ethereum's still just in this upper range, but we did front run that weekly the other day, which was kind of important. And the now we have the SFP into the weekly. Actually, yeah, SFP into the weekly, and that 786 is above. But since we've re-entered back inside our volume profile, rejected it, and rejected the pitchfork, we're coming down to our support level. Now, I posted about this in the Telegram earlier, but we're not quite there yet. And I marked this out in yesterday's video. This is the back test of our local bottoming range that we had here, the value area high. Because anytime you break out of a bottoming range within a bigger range, sometimes you will come back down, back test that, and then continue up to actually take out your local highs here. Also, if we look at pulling that fib from our lows to our highs, I believe it was actually from the low here. Yeah. So you can see that golden pocket, naked, value area high is going to be coming in. We actually haven't touched the golden pocket yet. You can see we front ran it just barely, at least on the Coinbase chart. We front ran it just barely. So I would expect this to keep moving down to bounce from this general area, 44.23, let's say, to about 4,400, 4,405. And that's the area. Of course, if we break that, we have a fresh weekly down here around the point of control of both the larger range and the smaller range. That would be the next area. And actually, I will set an alert here. Weekly long opportunity there. Now, it's not a, I'm not saying it's a weekly trade. I'm just saying that's a weekly level, and it could be a long opportunity if we're going to just continue to trade this bigger range here. Because it's the point of control. Since we did reject from value area high after attempting to break out, you oftentimes will drop to point of control. Of course, you're probably going to see that and then that. And then if we break this weekly, yeah, we could hold the value area low again. But honestly, I mean, I think we're going to come down and take out all these semi-equal lows in here at 4,200. We front run that last time. Yes, we do need to work on a divine under the hood indicator. Absolutely, Mark Dutch. Our pink, I worked on this MCB. It's money flow. It's not accurate on purpose. Myself and Gretzky did not want any legal issues with Market Cipher. Okay. I think that it's just a clone of VMNC Market Cipher B divergences. Vu Manchu Cipher B plus divergences. Yeah, I think I've looked at Vu Manchu before. Let's see. Cipher B plus divergences. It does look very similar as well. Yeah, I mean it Vu Manchu looks pretty good too. Now the money flow is not quite the same as Market Cipher B. And remember, the most important thing on Market Cipher B is that money flow for sure. But the momentum waves are really nice, nicely aligned here. Excuse me, correlated. And I mean, it's better than nothing. If you don't have it, it's better than nothing there. Yeah. So Veeman C, Wiggle Worm sounds like a sounds like a naked POC. What about ETH to 3,900 or below 4K for that matter? So here's the bigger thing on ETH. I'm still looking at ETH to make new all-time highs, not just a SFP of the all-time high, like real new all-time highs based off of the larger, let's zoom out to the 2-day chart, based off the larger impulse. And let me turn off all these levels here so you guys can actually see. So what I'm looking at uh, on Ethereum, we have our initial impulse up here. We had a wave 2. This could have been the end of our wave 3. And now we're going to be looking for a 3-wave corrective move over the next month or so to come down to backtest because we're rejecting from the top of a macro pitchfork, right? Anytime you reject from the top of the macro pitchfork after taking out all-time highs, you're going to be looking for that 3-wave corrective move in a wave 4 to come down. And I would look at 37 to 3,900. Thank you, guys. You should be able to hear me now. Thank you. Thank you. I got it back on the chart, on back on here. So let me, I do not know why this keeps happening here, but there we go. Okay, you should be able to hear me now, guys. Let me see. Okay, well, what I was saying is that we do have that topping reversal range here with bear divs on the chart, and this could be a distribution range. We're at the top of a macro pitchfork. We've took out the liquidity from the all-time highs, and we are at macro resistance here as far as that big pitchfork. The only question is this third wave done here? And the thing is with this third wave, I don't know how long my mic's been cut out, but you can see a 1, 2, 3, 4, 5. An extended first wave is not an invalidation as long as your third wave is not the shortest. Well, our third wave isn't. Clearly, the fifth wave is here. So, yes, it's rare to see that big of an extended first wave, but oftentimes off major lows, like this was our major test of that VWAP, you can see that. Not entirely convinced that the third wave is done here, but we are at the top of a macro pitchfork with a distribution type range forming with bear divs on the chart. So with that in mind, I'm just playing this range here, the tops and the bottoms of the range, the key levels, until we get a clear direction here. Now, if we break the range down, I'm going to say this third wave is done, and I'm looking for that three-wave corrective move down to our 382 to our 0.5. Let's actually pull that 382 to 0.5. What did I just do? And if we look at that fib from the lows to the highs, we turn on those wave 4 corrective targets. You can see where's that 0.5 coming in. That 0.5, that's why this box here is so important. It is between the 0.5 golden value area high of our 4-year long range. That's our 4-year long macro range, naked daily point of control, and the bottom of the pitchfork band. Because oftentimes if you reject from the top of a pitchfork with a distribution range up here, you'll come down, you'll bounce, and then you'll come down to the bottom of the band. You'll bounce from the bottom of the band, and you'll attempt another breakout. So for me, this area here would be a swing long opportunity. But we could see a bounce from the 382. And actually, this box here, I would like, this box was made from this high, but we've got a new high on the, which raised the 382. And honestly, I'd be looking between the 382 and the bottom of the pitchfork band in there. And it will take some time if we chop around in here for a bit. Maybe we get that dump out of the range, come down, hit into this area. We could bounce from this box, or this box would be the best box to bounce from, in my opinion. That support level, because also, what did we do, guys, with that 4-year long range? We broke out of the 4-year long range. We had an immediate back test. We came up and made new all-time highs. Just barely, but we made new all-time highs. Now, after swing fail patterning the all-time high, oftentimes you'll come down for a higher time frame back test of that macro value area high, and then you'll get the big move. So that, for me, is very, very key. What am I doing? Okay. Get rid of that. Tiamat, thank you so much for that. And yeah, we'll look at Chainlink. Damn, no sound for a while. Okay. Sorry, guys. Yeah. Okay. All right. Looks like that kind of it stopped swallowing the microphones. I'm sorry, Mark Dutch. It just is so enticing to me. Okay. All right. Chainlink. We'll look at Chainlink. Why not take the short on ETH now? Well, I would have taken the short on ETH. I actually remember a couple days ago we were looking for that short on ETH from that golden pocket that was, so if you take a golden pocket from the all-time high to that low, and then you turn on the golden pocket, and we were looking for the golden pocket and the top of the value area high golden pocket area, this general area. We wicked up past it a little bit, and so I didn't take that up here, and this was on a Saturday, and I wasn't looking at the charts. By the time we got back really focused on the charts, we were down here, and I'm not going to take a short here, put my stop loss here, because there was a potential that we could just keep continuing higher to hit this box. So now I missed that short. I'm being patient, and I'm waiting for this level. I might take a scalp long from this level if I have confirmation. Right now, it doesn't look too good here on the charts. But what I'm going to be looking for now is, yeah, I guess if we bounce at some levels, I will look for a lower high, and I could look at taking a short from a lower high to continue breaking that down. But I'm not about to short the lows of a few-day move here. It's all about risk management. Remember, everything in trading is about risk management. Even if you think it's going lower, if your risk management on the trade is not on point, do not take the trade. Let me check here. Do we have, yeah, we have that weekly that's just above us that wasn't hit. And then we have a new weekly, but it's not confirmed yet. That'll be interesting. And then, of course, the weekly down below us. So let me go back to our 2-hour chart, and let's turn on our weekly levels. This area here, remember I talked about this yesterday as well. This weekly in confluence with the POC. If this doesn't hold, then I'm looking down to here. Now, if we do come down here and bounce from that area, I will still be looking for a lower high to short. And that means we'll just pull a fib from the highs to that weekly, and we'll be looking around that golden pocket value area high. But look at, we front ran this weekly into our box. And because we front ran that weekly into the box, I was concerned that we were going to get a deviation and get back up and actually hit that weekly. So I couldn't be looking for a short down here when we front ran the weekly, we front ran the 786, we front ran our box pretty much. And then like you're going to, you know, it's not, you know, you're going to short here. You're going to have to put your stop above the high, probably even above the weekly to be safe. And even if you're targeting down that golden pocket, risk is not there, not at all. Even if you're targeting the weekly POC of the range, risk is not there. So you're not going to take that trade if you're late on it. Even if you think it's going to distribute all the way down. Now I'll have to wait for a local bounce, short the local bounce, stop would still go above the high. And in this case, yes, I would be targeting, I mean, this would be a TP1, and yes, that's only a 1.75, but I would be targeting that 382 and lower targets. So we'll keep an eye on that on the streams, guys, throughout the next few weeks. We'll keep an eye on all of this. We'll look for some trade setups, and also I'll post about it in the Telegram. 2-day order block at the 382 on ETH. Well, that's just more, that's great, you know. Yeah, actually, that 2-day order block right there, it's a little bit below the 382, but that's a nice order block right there. Let's see, is there a 1-day order block there? Yeah, I mean, you know, that general area is nice, and you can see the top of that order block is going to be coming in around that pitchfork band. You could even pull a small range in here. Look at this range and that value area high of the range, that small range, which is the pitchfork band. You can see that value area high is coming in around the pitchfork band. So that was your previous little range. You had your previous little week-long range. You broke it to the upside. If you break this month-long range down, you're going to retest the balance of that prior range, which happens to be right where your pitchfork band is. order block next to it, 382 next to it. So yes, absolutely. And look at, there's nothing in here. If you break this range down, if you don't SFP these lows down here, there's nothing to hold you. I'm sure there's some lower time frame order blocks in there. You'll get small bounces, but I would expect lower highs, lower lows to continue. Yep. Okay. So let's go to Chainlink here real quick. Chainlink. Chainlink, locally, we're just playing this range on Chainlink. This is a daily range that we're playing on Chainlink. Now, I do have to say this, and I said this in yesterday's video. Chainlink does have some pretty bad bear divs, and money flows consistently draining out here. Bear divs here, of course, bear divs here. Money flow bear divs on NAMI all the way into these highs. And now that we're losing the pitchfork midline again, like we're just playing this range. So just like Ethereum, we're not sure if this range is going to hold and we're going to continue pumping or not, but we have this upper range and play the range until it breaks. So locally, we're in scalp territory, waiting for interest rate decisions, waiting for those decisions. But we did come up to our resistance. I marked this out ahead of time. We actually marked this out last Tuesday's stream, if you remember. Last Tuesday, we marked this out. And why was this box a resistance? Well, if you take your fib from the highs of the range to those last lows down here, golden pocket was there. We rejected from the golden pocket. Now, remember, we were looking for a lower high because we had broken market structure bearishly. By breaking these lows, lower low, lower high, lower low, lower high, lower low. Bearish market structure in here. Because we had bearish market structure during the last few weeks of price action, if we were to get a bounce in a bearish scenario, you're going to come up to that golden pocket, you're going to reject that golden pocket, and you're going to continue making overall lower low, lower high, lower low to more macro support levels. So, and this box is from yesterday's video. This box wasn't here yesterday. This is a new local support level. But the real big support level that I'm looking at is between 20.85 and 20.6 down here at the value area high. Why are we looking at this value area high? Very, very important value area high. Let me take this range and extend it all the way. That value area high is a macro breakout. Let's go back to the 2-day chart. And if you look at this range, goes all the way back to November of 2023, so almost 2 years long now. This range, this upper big volume profile, we're breaking out of the volume profile, coming up, taking some local liquidity out. Now, after taking out some local internal highs on a weekly time frame, these are weekly lower highs. If we do get a 3-wave corrective move down to that macro support after breaking above it, that volume profile, you could bounce from that macro support and continue up to new all-time highs, just like we're kind of looking at with Bitcoin, by the way. Bitcoin had its, let me turn these off. Bitcoin had its 2025 macro range, right? Let's turn on that macro range. What happened here on Bitcoin? Broke out of the macro range, made new highs, came back, back-tested that macro range, and now because we back-tested and we're bouncing, there is a potential that this continues pushing higher here. And so now we're looking overall for the same thing on Chainlink. But just like with Bitcoin, more locally, after breaking market structure bearishly by taking out these lows here, we have a bearish break in market structure. We could look for a lower high before putting in another lower low into having that 3-wave correction around the value area high before continuing that big breakout. So more macro timeframes looking for that bigger 3-wave corrective move is a potential. Could it be that it's over and we bounce from the macro value area high after? What am I doing here? Let me just do this. Could it be that we bounce from the macro all of 2024, we rejected from it. We broke above it in 2025, back tested it in 2025. Now there's a potential we could keep going straight up. This is not likely to be because we broke market structure bearishly. Just as a technical trader, because we broke market structure bearishly on higher time frames by taking out this low here, we had a bearish market structure break. Now, technically, because we had a bearish market structure break, there's a greater possibility that we are going to put in a lower high because we put in a lower low, and then we're going to come down for one more lower low. seeing that 3-wave corrective move, ABC or WXY correction in Elliott waves, and then get the big push in another 5-wave, 1, 2, 3, 4, 5-wave impulse to the upside. So we're looking at both possibilities as a trader, and we don't know which one's going to occur, but we prepare ourselves for both. Is it over? Did we bounce at the macro value area high, and are we about to take off? It could be. As far as market structure, it is still more bullish. Higher high, higher low, higher high, higher low. Could we continue higher high here? Yeah. But now going back to Chainlink, we're looking for something very, very similar. We broke out of the macro volume profile. Do we see that 3-wave corrective move over the next month? Reject golden pocket. That's the most common area you do if you are going to reject on a lower high. The most common area is golden pocket. Also happen to be right around the value area high of this upper range. Do we see that now break down to come down to 20.6? And if we come down to 20.6, we have now let's zoom in on this. We're on the 2-day chart. Let's zoom in onto the 4-hour chart. You can see within this upper range that I have this volume profile marked out for. Really, it's all the price action breaking above this pitchfork midline, the first break above the pitchfork midline. So if we look at this, let me pull this right there. If we look at this, this is our range, but this is the value area low of the range is going to be support, but the actual lows of the range are right here. So where is that box begin? The liquidity grab of the lows of the range. Your range above the value area high. Your range around the pitchfork midline or above the pitchfork midline, the first break of it. So that's your range. And now if we're going to see that bigger, push down, break in market structure bearishly, lower high. Now are we going to see one more push down to actually grab the lows of the range, grab the liquidity of the lows into your macro volume profile, and then bust? Bust up to your next major level up here. So with some stops along the way. So because of that, I am looking at this potential area as a swing long opportunity. I think I already have one marked out that's hidden, an SFP that's marked out and just hidden, but we'll do it again just in case. So here, message SFP swing long opportunity. It's not guaranteed. It's just an opportunity. So that's why I mark it out. Now we could just take this, hide this here. And yeah. Now locally on Chainlink, after rejecting from that golden pocket, very harsh rejection from the golden pocket, we're starting to, you see, we came down to the pitchfork midline. We saw a little bounce from the pitchfork midline, just made a little lower high, and then we're breaking the pitchfork midline down. We back tested it earlier yesterday, and we're still underneath it now. We're just ranging around the point of control. So now because we're underneath the pitchfork midline, it was support and now resistance. Now we're going to be looking to come down. We also rejected value area high. We're at point of control. If we lose point of control, we can expect value area low. Well, what else is that value area low? If you pull a fib from the lows of this move from September 6th to the highs that we made yesterday, not value area low, excuse me, 786. 786 is down there as well. 786. And then also that box extends a little bit higher because we have this. You can see this harsh, quick dump here. And then we got an immediate push up. So that liquidity resting under that dump is going to be important. Even though it's an internal liquidity grab, this internal liquidity here, SFP into value area low into 786, that is going to be your local support below, where you could see some sort of bounce and then continuing to break down. So locally, you play the range until it breaks. The value area low of the range support is here. Sure, could it hold again? Could we get a whole nother rotation up to the top to actually grab this liquidity first? Yeah, absolutely. You could just be playing this range for a while. But so local support levels, macro support levels, follow both of them. We don't know what the price action is going to do, but we mark them out and we wait for confirmations when we get down there. If we see confirmation, we take the trade. Okay, let's see here. 44.97 short. That's okay. What's up, False Prophet? Welcome in, man. Very good to see you. Okay, 78K whale positioning. All right. Yeah, tomorrow, guys, I'm really being cautious with the volatility that could come in tomorrow. I'm being cautious with scalp positions right now. But okay, 4 hour on Chainlink. Money flow does still look pretty bullish. It's about to cross over up into the green on Nami here, but Nami did print that hidden bear div on the rejection from the pitchfork. After losing the pitchfork, we rejected it, printed a hidden bear div. Now that hidden bear div is a continuation signal, so that does give us a higher probability of continuing down to value area low. But money flow does look pretty decent, and money flow is going to overpower a hidden bear div or a regular div. And if we look at, let's go to the 1 hour chart here. Yeah, 1 hour, no real bull divs. Yeah, actually, we do have bull divs. Higher highs in the price, momentum waves, lower lows in the price action, bull divs. But we're kind of just chopping. We're chopping around, forming a range here. And I suspect that we'll chop around and form a range until tomorrow. Honestly, like a lot of people are waiting for tomorrow. Okay, so that is about it for Chainlink. Now, on Chainlink, because we didn't actually hit, yeah, I'll look at BTC in just 1 second here. Because we didn't hit that weekly, Tiamat, and the SFP above, and the value area high we didn't hit, there is a potential that we come up here again and take that before seeing the bigger breakdown. Just playing the range for a bit. So maybe we get a scam. We dump into here by tomorrow. We're at support. FOMC happens. We get the immediate rate cut. Oh, everyone's bullish. Hit into local resistance. And then now you drop. I'll be watching for that. Yeah, quad witching this week too. Yes. Okay, let's check Bitcoin. Yeah, we're attempting to get back above that SFP level. So I would say, though, breaking out of this little channel, that's your micro trend that we were looking at. This is actually pretty bullish to me that we saw a little swing failure pattern, but we still held back above the value area high of our bottoming range and the value area low of our previous range. We're breaking back inside that volume profile. So I would be watching. If we break this daily, I think we're coming up here. And I did say earlier in the stream that because that liquidity is still resting above, that we do have a high likelihood of continuing up to grab that liquidity above us to actually stop out all of it, of the past week of price action, up into our actual golden pocket. And remember, oftentimes in lower highs, you will keep continuing up until you get into that golden pocket. So you can see around 117.6 to about 118K is where we would take all that liquidity above us. And what is that? You know, that's right in this area here. Yeah, but this failed SFP, it looks like it's going to be a failed SFP here. Actually, it already is because you've already broken that high. So you would have gotten stopped out now. Let's say if you were on the 5-minute chart, you took the SFP of your prior highs. You took the SFP, you're going to put your short, your stop above that high, and you're going to be targeting lower wherever you're targeting. You're now coming up to getting stopped out because you're taking out this local high. Just barely, but you've taken it out. So that was actually a failed SFP there. And it looks like we want to continue higher. Yeah, I mean, we are seeing some bear divs on the chart on the 1 minute, but I'm not too concerned yet. The big thing is if we come up to that resistance here with continued bear divs, that's when we're going to get a little bit worried. Yeah, it would be brutal, man. But you know what? That's what happens with retail. It's the most brutal thing usually ends up happening. What about the 117.4 level to SFP, the previous high? Yes, so I am looking at that SFP. But remember, that SFP, usually you want to see a pierce of that level. So if we pierce that level up into this, just a quick pierce, maybe a 15-minute SFP, and then you get down below it. But generally, when you see an SFP, it's the best SFPs are when you pierce it into a resistance. And so I would be looking for like a $400 or $500 pierce of that level, a quick push up, then a quick dump here to actually hit resistance, and then that dump. Now you have that naked weekly POC at 118, 117.8. Naked weekly POC at 117,800. So remember, those naked weekly POCs are very strong. That's the start of our box. So pierce 114, go up to pierce 117.4, go up to 117.8, reject, get underneath it. Absolutely would be a good short trigger there. Okay, let me see here. All right. Yeah, but locally, guys, just be aware because we have a big day coming tomorrow, and there could be some shenanigans that happen overnight. There could be some shenanigans that happen leading up tomorrow, right up into the meeting and right after the meeting. Solana is bouncing from that 382. So yesterday, we had the big bounce from this bottom here. And if we're looking at an impulse from this bottom, we could be looking at a bigger 1, 2, 1, 2, 1, 2. That's your triple 1, 2 impulse. And then this could be the start of a third wave. Now, if we're looking at the start of a third wave from there, very nice 1, 2, 3. Your fourth wave is going to retrace to the 382 or to that 0.5. And then you're going to see your fifth wave to end the third wave only. Then after that third wave ends, you're going to be looking for a bigger 4, 5, 4, 5, 4, 5 to end this overall impulse. And so Solana looks pretty good overall. That resistance above that we front ran is very interesting. This resistance up here. If we turn on some of our levels, no, not a monthly level. It's a weekly level up there at 252, a daily level at 256, naked monthly point of control at 256, naked weekly point of control at 255, no naked dailies up there. So there might be, but my indicator didn't go back far enough. So this level up here is the next big level. I understand we did reject from the top of the pitchfork as well as our previous range value area high. I marked that out and I showed that in yesterday's video. So if you want to go check that out. Now, locally, we're seeing a nice bounce from the 382, telling me that this is most likely to be an impulse not done yet, coming up to that 252 to 256. But locally, we are at the top of a major pitchfork. And remember, just like Ethereum, you'll see wicks past it. You'll see a range that forms up here. So now I'm looking at a potential range to form in this area. With the range that could form in this area, if we are going to have come up here today, or, in the next 24 hours or so, what I'm going to be looking at with this upper range, you can see that our 786, we have a fresh naked daily point of control up there. We have a 786 up there, and the top of the pitchfork is up there. So locally, this is my local internal scalp resistance. Now, I'm not too focused on this with this just above. Even if we come up here and reject, I don't know for sure if I would short that. Let's pull our volume profile. Yeah, and your value area high is close by, close by to that. Because this is such a quick, young range, by the time we get up there, that value area high could shift up a little bit as well. But that's what I'm kind of looking at here. You could even pull this to like right here. Doesn't really change the range too much. But that's your local resistance, 246 really, about 246. And then because we could remember, we could be seeing in your wave 4, you often look for a 3-wave correction. And your 3-wave correction is longer than your wave 2 correction. So your wave 2 correction, you have your 5-wave impulse, 1, 2, 3, 4, 5 here. You had your big 3-wave correction in a wave 2. This is your wave 3. I'm not even going to try to count all that crap. If that wave 3 is done, then now you could be looking for a wave 4 that's generally longer and bigger than your wave 2 here. So we could be looking at a 3-wave move down over the next couple of days to hit 225, and that 0.5. I mean, we are bouncing from the 382, so technically we've hit the target, and we could just move from here. But if we are going to see a rejection from this 786 naked daily point of control, then we could come down here. Now, on the other hand, you still do have to look at that golden pocket. So if we pull a fib from the highs to the lows of this local move down, you can see the 786, but if we turn on the golden pocket, that's going to be where your point of control is. So you could reject from there as well. It could be this. That's kind of what I'm looking at for the next day or two. And then overall coming up to this area. Now, once we see a rejection from this area, we're looking for a bigger pullback of the bigger wave 3, right? So now let's zoom out onto the 4-hour chart. Remember, our bigger wave 3 started from here and could end up here. So you're going to pull your fib from the lows of wave 3 to the highs of your wave 3, and you're going to be looking between the 0.5 and the 382. So you'd be looking for there. And actually, let me make sure that this one, yeah, that one's pulled from there too. And oftentimes, here's the thing, oftentimes your larger wave 3 or your larger, say this is your 3rd wave, your larger wave 4 will retrace to the lows of a lower wave 4, a lower degree wave 4. So that's what I'd be looking at. And if this comes down here, I know this is getting messy, but if we see that 3-wave corrective move in this local wave, in this local impulse, the wave 4 comes down to the 0.5, and then we finish the 3rd wave up here, then we would get that bigger 3-wave correction. You can see that that 0.5 would be in confluence with the lower degree wave 4 as well. So a lot of nice Elliott wave confluence adding up there. But if that was confusing to you, I'll be keeping an eye on it over the next week or so, next couple of days, week. So just tune into the streams, tune into the videos, and I'll keep you updated on that. XRP is kind of a nightmare to trade sometimes. I don't know. I think XRP does trade kind of nice. The thing with XRP, we front ran our golden pocket value area high, but we broke out of our descending channel. You can see this nice 4-hour corrective move here. We bounced from the value area low. We formed a nice little rounded bottom here. Left shoulder, head, right shoulder, breaking it back up, breaking above the POC of the range. Now, after you bounce from value area low and the channel midline, we bounce, we get a nice impulse up here. We're back testing the POC and we're back testing that channel breakout. We're holding it so far, so I expect us to move up to here. 1, 2, 3, all of this is a 3rd, or yeah, you could be looking at all of this as a wave 1 of a bigger impulse, right? You have your 1, 2, 3, 4, 5 in a wave 1 of a much bigger impulse. After rejecting from here, you could pull 3-wave move to pull back to golden pocket, and then a big 3rd wave. So we'll be looking at XRP as well. But as far as our local range goes here, our 4-hour range, upper range, we're above the point of control, and we're attempting to flip it to support to continue up to value area high. Value area high happens to be where your golden pocket is around, pulled from the highs to the lows. And actually, yeah, highs to the lows there. Golden pocket's coming up. Now, this golden pocket has been hit already. Let me Yeah, this golden pocket has been hit because you can see it was from this high to this low. We came up and hit it in here and rejected in here. So actually more appropriately, because that golden pocket's been hit, we would want to pull the golden pocket from this high to this low. And yes, that golden pocket has been hit, but then now we're going to look at our 786 because in this descending channel structure, that 786 is still going to be in that same area. So I would say that's actually our better box to be looking at. And then we can look at some naked daily points of controls, naked weekly points of controls in here. Okay, nothing up here. Down below us, we have a fresh naked weekly, but we will keep that off the chart. I think that's already marked out, just hidden. Naked dailies. Okay, no naked dailies above us. Actually, there might be. My indicator doesn't go back that far. It stops right here. Stops right here, actually. So we could absolutely have a naked daily up from this guy up here. But you can see this box here. We have two supports. We have the SFP of our very, very local lows into the golden pocket. We didn't quite come down there yesterday. And then we have this box. That was all yesterday's analysis. But if you want to look at that, go check out yesterday's video on XRP. It's timestamped, so you could go straight to XRP. The thing is, money flow looks pretty bullish here, crossing up into the green on NAMI, nicely in the green on Market Cipher B. 1 hour chart. Yeah, nice bull divs here. Lower lows, higher lows, higher lows. Money flow coming up now. Money flow coming up. And yesterday in the video, I talked about how NAMI's money flow was already nicely rising. So we are bouncing from the point of control. Yes, we saw small deviation below point of control, but pretty much bouncing from point of control, bouncing from the back test of the channel after breaking out of the channel. And we are continuing. So I expect that we are going to continue up to this box. 321 to like 323, actually. We could even lower this a bit. Unless there was a daily level up there or something. Let me check that. Let's go to... Yeah, there was that daily level up there. That's why that box was a little bit higher too, because we had that daily level here. So but I would say this locally and then that daily level, you have to watch out for that. Yeah, and I mean, money flow on Market Cipher B is still draining out on the daily. Because it's still draining out on the daily, you have to be aware that this could be another lower high before putting in another lower low. Having a fake breakout of the channel, falling back within it, and then dumping. So just because money flow looks bad, overall market structure, lower high, lower low, lower high, lower low, lower high, lower low. Could we continue this bearish market structure? Okay. To 3.4. We could see our wave 5 go up to 3.4. If you're talking about 1, 2, 3, 4, 5, that's kind of a long fifth wave up there. But yeah, we could. XRP and its box, it stay in. Yeah, XRP's been kind of blah. Short from 327. Yeah, 327's that daily. I mean, that 321 to 327 area is a decent area to look at. Oh, you're short already from up there. Okay, well, yeah, might as well hold that. But you might have a likelihood of coming up there. So, you know, just be aware of that. What would be really nice for you, Tima, is to get a push up to the value area high in 786. Oops, let's do the 1 hour chart. and then reject from here and add to your short, and then just see the big, dump continue, finishing this 1, 2, 3, 4, 5, and then I would pull your. If that was the case, then you're going to want to pull the Fibonacci from the lows of that impulse to the highs. Let's just throw it on the value area high. And you would look at that golden pocket. Because if you have an impulse up here, a 5-wave impulse, 1, 2, 3, 4, 5, then you're going to be expecting a bigger 3-wave move down to that golden pocket area and then continue with another impulse. And that could be your more macro bottom where you're going to see a big push up, or it could be an ABC. Remember, within an ABC, you're looking for a 5-wave impulse within here, 3-wave correction within here, and another 5-wave impulse in here. But overall, the bigger 3-wave move could just take you up to take out your lower highs here, and it would still be overall a correction to the top of the range, and then you could dump. So yeah, let's just see how it plays out. Guys, it is 2 o'clock my time, and I do need to get going here. So thank you so much for joining for today's stream. I forgot, we do have a few partners of the channel. I know you guys have heard this before, but if you're interested in registering with BYDFI, it's a VPN and KYC free exchange. They're offering up 20% discounts on trading fees, and then you can get higher discounts on trading fees the more you deposit. If you deposit just $100, you'll get a $50 bonus, and you can get access to the Telegram group, which is I partnered with BYDFI to create a Telegram group where I post some of my trade setups. So that is in the link in the description. The Telegram is in the description as well. Click on the Telegram link, and then once you're in there, once you've deposited the $100, type in /verify and then this user ID number, and it will get you into that Telegram group. Also, we do have NAMI. They're running a 50% off special right now. If you're interested, the link is in the description. The discount code's in the description. And then we have MEXC and Bybit as well that are offering discounts on trading fees and futures rewards if you want to sign up using my link there. So thank you so much, guys. I will see you not tomorrow. I'm just going to make a video. I'll see you on Thursday, but I will try to be active in the Telegram tomorrow during FOMC. Keep you guys updated on what's happening, and have a good day. Remember, trade safe, guys, set stop losses, and prepare for tomorrow, because we don't know if tomorrow is going to be a nothing burger, if everything's baked in, or since it's the first rate cut in a few years, we could have some major manipulation and volatility. So just be aware of that.